Weekly pending home sales disappointed in the last week of April. We counted 10% fewer weekly pending home sales than the same week in 2024. To be specific, single family home sales came in 8.6% fewer than the same week last year, and condos came in 19% fewer sales. So, nationally, the weekly pending home sales saw only a small rebound after the Easter holiday from 2 weeks ago. So it's not only the transaction count, prices looked soft last week too. The median price of the weekly pending home sales came in below the same week a year ago. That's the first negative year over year reading in nearly 2 years. This is 1 week of negative home prices nationally. The week 1 week is not a trend, but it could rebound next week. But it is notable that this is the first negative reading. The annual rate of home price change has been slowing all year, and this is the first negative. During the week, mortgage rates inched lower. So the typical mortgage payment for a home buyer now is nearly 6% cheaper than for buyers a year ago. The average 30-year fixed rate mortgage is still almost close to 7%. So there's very little incentive for potential buyers sitting on the sideline. Meanwhile, the unsold new listings rate surged in the Northeast this week. Connecticut, New York, Massachusetts, New Jersey, Pennsylvania all had significant rebounds in the new listings after the Easter holiday. These states are where inventory and the weekly new listings have remained very constricted. In some cases, the available inventory of unsold homes on the market in these states is barely above the pandemic crisis shortage levels. So, a little growth in seller volume in these states is welcome. Stay tuned to see if that trend continues. I'm Mike Simonsen. I'm the founder of Altos Research. Let's take a look at the details of the U.S. housing market for the end of April and the start of May 2025. So let's start with the weekly pending home sales. We track every home that takes an offer and goes into contract every week across the country. So these are the weekly pending home sales, and the homes typically take 30 to 40 days in contract before the sale closes. Not every home in contract will close, but this number is a very good proxy for May home sales. So these will be the headlines in a couple of months. And home sales were very clearly sluggish at the end of April. We counted only 71,000 new contracts for single family homes this week. That's up 4%, 4.6% over the previous week, which included Easter, but it came in 8.7% fewer than the same week in 2024. In this chart, you can see this year's purple line has come in under 2024 for a couple of weeks now. 2 weeks ago, that included the Easter holiday, so that's no surprise. But this week did not rebound nearly as much as I'd anticipated. I do think that next week, home sales will come in slightly better than 24. Last year at this time was really rough. Mortgage rates were jumping to 7.5%. Starting next week, the year over year comparisons should get very easy. Also, we have not yet reached the seasonal peak of buying activity this year. With the late Easter, that peak is probably not until later in May. So we should see several weeks of increasing transaction counts until the Memorial Day holiday when the market pauses again. The takeaway for home sales: April started with more home sales growth over 2024, but it ended with fewer. So May should be mostly more home sales than last year. If next week we only see, say, 72,000 weekly pending home sales, that'd be a bearish signal, and you can be sure that I will highlight it next Monday. Stay tuned for that. So, home prices. As I mentioned, the soft data came in not only for transaction volume, but also in prices. The median price of the newly pending home sales this week was $395,000. That was down 1% for the week. And home prices for the week were lower than the same week in 2024. So, for the past few years, the story has been that home sales are low, but home prices are still up year over year. Home prices kept climbing even as demand weakened to very low levels over the past several years. Why did home prices keep rising? Well, the supply of homes to buy was still quite restricted. There were very few new listings each week and still restricted levels of unsold inventory nationally. Now, after 3 years of rising inventory, we're finally out of that shortage. But demand hasn't recovered. So we're now at a point where rising supply is great enough to impact prices. So this chart of the weekly pending home sales, the median price of the weekly pending home sales is very useful. You can see how even in the face of slow sales, the blue line for 2024 stayed elevated over 2023 all year long. Prices moved higher. Again this year, the purple line for 2025 has been every single week all year, just a little ahead of last year. But this most recent reading at the end of April dipped below last year. So last year, the median price of single family homes newly pending was $399,000. This year, it's $395,000. So as I've said before, 1 week is not a trend. Prices will probably rebound a bit next week, but any negative year over year reading in home prices is very unusual. So you can see the green line here from 22. That's when the market was slamming on the brakes. Prices adjusted down that year too. So 1 week is not a trend, but there's nothing positive in this reading. We can get signals with the future with the leading indicators of prices too. So the median list price, and the price of the new listings both ticked up for the week. So post Easter, and are running about 2 to 3% ahead of last year. So the combination tells us that we're really aiming for about 0% home price change on average across the country. The big thing I'm watching for now in home prices is any big shock. For example, mortgage rates spiked with the tariff announcements a month ago. And if that happens again, home prices are very fragile. So, home sales are down. So, inventory grew by 2% for the week, a solid rebound in supply after the Easter holiday, even though there are still not a ton of sellers each week across the country. Slow sales means that unsold inventory builds. As I mentioned, the supply of homes on the market is finally ample enough to impact prices. In fact, there are more homes on the market now than at any time since before the pandemic. We know that inventory has been up across the Sun Belt, but I'm now watching the Northeast to see if that part of the country is finally catching up with some supply. Plus, we have the whole summer of inventory growth still to come. So this story is not over. See the purple line here for 2025's inventory curve? So there are 744,000 single family homes unsold on the market across the country. That's 33% more than last year. It's more than the peak of all of 2024, which came not until October. It's more than April of 2020, when, due to the pandemic demand boom that was just starting, inventory started falling rapidly each month, each week. And in this view, it's very easy to see how we end 2025 with an end to the pandemic shortage that we faced for 5 years. So, time for a new era and new assumptions about the housing market. There were 78,000 new listings unsold for single family homes across the country this week. That's 10% more than a year ago. So inventory is building. There was a 12% rebound after the Easter holiday. But in fact, it was actually fewer new listings than I expected. I was looking for 80,000 single family homes to get newly listed for sale, and we came in at 78,000. So I'll look again for 80,000 in the coming week's data. I think we could see that 80K threshold for the first time all year in the next week's report. New listings. So new listings rebounded 12%, but sales only rebounded by 5% after the holiday. And new listings could continue to accelerate. One thing to watch in the new listings data is if the slow sales also puts a ceiling on new listings. So if I'm not buying a house, I'm not selling my current one. So if new listings hits a cap and retreats back to maybe the old levels of the last few years, that's actually a bearish signal. That's not healthy for housing. So in this chart, the purple line is this year's weekly new listings rate, and it has been approaching the old normal levels at the top. The end of April didn't get to 80,000. And so you can see the purple line is still sagging below last year and to the closer to the set at the bottom of the chart. So let's see next week if we get some growth. Compounding with the seller volume is the fact that there are dramatically fewer immediate sales happening now than in recent years. So only 15,000 new listings went into contract immediately after hitting the market at the end of April. All in all, there were just a 1% or so more sellers than last year at this time. So again, this might be a signal of both buyers and sellers getting the chills. And again, if that continues, that'd be an unhealthy sign for this housing market. So let's wrap today looking at the leading indicators. As inventory grew and transactions disappointed, it's not surprised that we measured a bit of a surge in price cuts at the end of April, too. The percent of homes on the market with price reductions rose 60 basis points to 36.5% of the market. You can see the 2025 line here remains elevated compared to any recent year. This shows significantly weaker home price pressures than we've had since 2022. Any price reductions can change, of course, when demand kicks in. If mortgage rates were to fall like they did in September last year, we would see some buyers come off the fence, make offers on houses, and we'd see this uptick in demand flatten out the price reductions curve. So, like in 2024, the blue line later in the year flattened out when mortgage rates declined. There is no sign of that happening now. This is another way to know that the supply of unsold homes on the market is plenty big to impact prices. The takeaway on price reductions is that it's just another data point that reinforces today's message. Home sales disappointed at the end of April. Sales are down, prices are down year over year, and consumers are waiting for conditions to improve, and they have not yet. All right, that's all the data we have time for today. The market's changing rapidly. If you need to be on top of it, I highly recommend that you join us at HousingWire and Altos Research. Go to altosresearch.com, run a free report for your zip code. There's a link in the description below. Click that, and let's get started. Thanks, everybody.